Let's take a look now as we look at our 60-minute chart of the S&P 500, which we do every week. And you will see in here as we look at the gray area being the area that is overnight trading, and the white area is the area of the day trading. And you are seeing what is an incredibly tight range in here. I mean, you're looking at a range for the entire week of some 15 points on the S&P 500. I mean, you're looking at maybe 3/4 of a percentage point at the most on the whole week. I mean, that is really nothing going on. Not much news here on Monday. You just saw this choppy market, but look at this as it moved across here just above that 2,500 number on the futures, and then, well, basically stayed in that range for most of the week. Tuesday, the president spoke in front of the UN with some very tough talk. And that kind of moved the market a little bit early in the day. You could see that. On Wednesday, you had Apple come out early in the day and talked about, or some of their users talked about that the iWatch had connectivity issues, shades of the past, when they had that trouble. I think it was iPhone 6 with the antenna. So you got this break in here, and the Nasdaq actually was weaker all week long. The news comes out on Wednesday of the FOMC. They hold rates. They talk about nearly a surety of a December rate hike, and talk about October beginning of the great unwind, the unwind from the balance sheet, as they go from $4.5 trillion down to we don't know where, at a rate that is incredibly slow. They're starting out at $10 billion a month, just letting essentially the matured issues go off, and then they'll start picking up selling and increasing it at some point to $50 billion a month. But if you look at the next year, you'll be lucky to reduce it by $500 billion. They might still be at $4 trillion a year from now. So it's an incredibly slow rate. Wednesday, the markets got sold off early as they started to digest the Fed's hawkishness. And on Friday, you got this tough talk that came out actually after the market closed on Thursday, with additional sanctions. They really want to shut off the ability for North Korea to do any banking, and really threatening any countries with sanctions that do any business with them. And then following that was Kim's H-bomb threat that he's going to blow one up in the Pacific. And also S&P downgraded China on their huge bulge of debt. So you got this selling that occurred late in the day on Thursday, and then Friday morning you could see it tried to come back all day, and then it's looking like it's just chopping sideways. Of course, here you have this decline, and then you have this looking like a triangle formation. So it could go either way in there, but if it breaks under this level, it's probably going to get slammed. If it gets above this level right over here, it's probably going to do better. And this is where we stand right now, with just about 2 hours to go in the day. So that is a look at the 60-minute chart of the S&P 500. Okay, so now we're going to move to the stock market. But before I do, I want to remind you that you're watching us on YouTube, well, subscribe to our YouTube account, and make sure you put comments on the YouTubes that we put up. Follow us on Twitter at askSlim. And we got to really ask you to become a member. Look at the kind of work that we're sharing with you in here. This is hours and hours, and sometimes days and days of work to prepare this Friday's show. And of course, our members just get gems of videos throughout the week, and get to see all of our rankings and trade setups, and our amazing option bias indicator, of which very soon going to release a script on that for our level 4 plus members, and it's going to be some great things coming up here. So do become a member, help support us, support our team. It takes a big team to be able to manage a business like this, and analysts and marketing people, and it just, we're showing you this just so that you can see who we are. But subscribing to us is what will keep this going. So I really want to ask you to become an askSlim member. Level 2, 3, 4, all of that has got tons of information. And go to our membership page and you'll see what all that is. All right, so now let's look at the stock market. We were spot on the stock market this week. We had anticipated that the stock market would get over 2,500 on the S&P 500, that it potentially could get up to 2,520, which was a fib extension level, but that the rally would come only for 3 or 4 days. It would likely stop around the time that the Fed news came out, and that it would then turn lower, and that those levels were likely to be levels that would be very tough to surpass. Here is the S&P 500. So what we're looking at now is a very key pattern that is shaping up in here. First of all, you see the hanging man pattern right there, and then as it turns over and rolls down. That was what we expected. Now, this is a very unusual cycle low right there, as essentially the cycles have doubled up. In other words, you came down and then rallied without much of a decline. So that becomes a very key level. If you get under that level, you could be in a lot of trouble. I think that the possibility of getting much over this 2508, 2509 level that it made is going to be very small. I mean, I don't know if the market's got 0.5% left in it versus some significant downside risk. Now, if it gets under this level right over here, you see that cycle peak resistance which supported that last cycle. I'm just going to put in an alert under there because I want to say at or below is a breakdown, and I want the system to let me know that it is doing that, so I'm going to create that. And if it gets under that level, it could be some very bad news. We're going to make a modest projection that we're down for the next week, week and a half, that our first target is 2483. It could be a lot worse than that if significant selling comes in. If something happens in North Korea, then who knows, right? I'm just talking about if nothing bad happens, then I think this is what's going to happen in the stock market. If something bad happens, then it could be a lot worse than that. So S&P 500, I want you to note, still in positive momentum and now getting oversold. So what that says when we look at that is that there's a kind of a likelihood that what's going to happen is that if nothing bad happens over the weekend, as I said earlier in the show, if the world doesn't explode, you probably get a rally here early in the week, and then I think you roll over like that. That's kind of the pattern that I think is going to happen here in the next week. And we're going to call for a down week, testing that level of 2483 or worse. So when I switch over to the Nasdaq, I want you to see in here this Nasdaq is a different picture. It's already broken that low. It's under the slim ribbon in here, getting down to this support area that was rising. It's no longer rising. We'll be adjusting that. And I want you to see in here that it's starting to get under the slim ribbon. So you didn't turn negative in there yet. Though I'm going to show you something on the intraday that's interesting. Here is your Russell, RUT, and you could see in here, this is the strongest of them all as it catches up and moves up to that old high. Not quite getting up to the 1452 high, but doing pretty good. This is the strongest index of all, as you can see right in here. Now, comparing all of the indexes on an intraday basis, you can see that here. What we're looking at is the S&P 500 having lost its upward momentum right there. Now, the last couple times it did that, it turned positive again. So if it turns red, it's going to be a different story. Here you can see the Nasdaq, helped by Apple on the downside, actually quite negative. The Dow Jones looking like it's losing its upside momentum, and the Russell in here clearly the strongest of the indexes. Now, I think what's important when we look at this and we look at the S&P 500 in here is that the S&P 500 looks to me like it doesn't have much upside, while the Nasdaq, to me, based on what we just looked at, says to me that it is likely to get a rebound from this level. So, I mean, for pairs traders, I think you buy the Nasdaq and either short the S&P 500 or you short the Russell. So here's that Nasdaq again. and you can see it's still green and oversold. Generally, you get a bounce when that happens. And remember the Apple pattern I showed you? The Apple pattern says that it's on the day or two from now where it should get a bounce. So we're looking for Nasdaq to do better than the broad stock market in the coming week. Now, what got me thinking that the stock market was going to peak Wednesday or Thursday of the last week was the VIX pattern. And I said that we were coming into a pattern where I thought that we would get some uptick in implied volatilities. Here's that pattern right over here in this analysis on the VIX. Let's just look at these last 3 cycles right in here. The bottom due here, we barely have an uptick yet. And here's where I said the next period of stock weakness is likely to come. So while I think that it's a possibility you get an uptick early in the week in the market, maybe a little downtick in here, I think that mostly next week there's a risk of implied volatilities going up pretty significantly. So we're just at the first day of that potential increase of the implied volatilities of the VIX, first day, right? So we could be a week or two where we see some pretty good upticks in implied volatility. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.